Right, just to make sure you are writing at 3 o'clock on Monday, isn't it?
Yes, yeah, Doc.
Okay, thank you so much. Right. Piccadilly is a small business that manufactures and sells 3 items of design clothing, namely Twito, Sweeto, and Bito, using the same resources but in different quantities. The company has branches in Johannesburg and Pretoria. The fashion industry is fast moving and consumer demand can change quickly due to the emergence of new trends. The budgeted selling prices per unit and resource requirements per unit are as follows. Included in the original budget at the beginning of the year was the sales demand for the month of September as follows. Twito, Sweeto, and Bito. The items of clothing Twito, Sweeto, and Bito were featured in a fashion magazine. As a result of this, a new customer ordered 1,000 items of each of Twito, Sweeto, and Bito for delivery in September. The budgeted demand shown above does not include this order from the new customer. It is estimated that there will be limited resources available in September. Resources will be limited to, or given the resources there. There will be no opening inventory of direct materials. Right. Calculate the optimum production plan that will maximize the budgeted profit for September. Assume that the new customer's order must be supplied in full during September. All right. When they talk about an optimum production plan, you should know that they are talking about what we call limited factors or principal budget factors. There will be resources that are in short supply. So you have to find ways of allocating that scarce resource. All right. So our principle so that's limiting factor or optimum production plan. Right. When they say the optimum production plan, refers to the units that have to be produced for each product in order to maximize profit. Considering limited resources. So what is the best way that we can allocate that limited resource so that we can make the best or highest profit? Right. The limited resource is allocated in order of contribution, a limiting factor. From highest to lowest. So we have to find which product is giving the highest contribution per that limiting factor, not just the highest contribution per that limiting factor. Right. So when we're answering this question, please, whatever I was writing there, you don't have to write it if you're answering your question. It's just for you to understand how you proceed there. Right. Our first step is to identify the limiting factor. We have to identify which resource is in short supply. All right. Some questions will be very clear. They will tell you that maybe the raw material is limited to this. But here we've got 2 resources that are limited. But the fact that they are limited, it doesn't mean that they are in short supply. Because maybe there are 20,000 square meters, but we only need 15. So the direct materials will not be a limiting factor. A limiting factor will only be there if the available resources are less than what we require. So although the limit is 50,000 direct labor hours, if we need 40, then there's no problem. What are the limiting factors? Remember that these products, Twito, Sweeto, and Bito, we should add 1,000 for each product because of the special order. So that means Twito would need 2,000, Sweeto 6,000, Bito, sorry, Twito 3,000, Sweeto 7,000, Bito 5,000, because of the 1,000 of each of Twito, Sweeto, Bito ordered by this new customer, and we are told that it is not included in the above demand. So when we do our analysis, let's remember that the total units are actually plus 1,000. Right. First of all, let's assess whether the direct material is a limited resource. Let's assess whether the direct material is a limited resource or not. Right. So I would start with direct materials. Right. These are the direct material requirements. From this, we can be able to determine the square meters required per unit. If Twito requires 120 worth of direct materials, when the cost per direct raw material is 20 per square meter, we can easily determine the quantity of Twito by saying 120 divided by 6. For Sweeto, 20 divided by 20. For Bito, 40 divided by 20. Right. So we can be able to say direct material requirements per unit Twito would be equal to 120 divided by 20, which is equal to 6 square meters. That one is for square meters in Excel. Sweeto, or maybe let me just write in words so that it doesn't confuse some of you. Square meters. Sweeto is equal to 20. Please don't just take the figures there, or maybe just wait for the recording. Follow the figures on the question paper and ask me if you don't understand. Because remember that we don't have a lot of time between today and the writing time. So please make sure that you will be asking if I write anything that you don't understand there. Because the whole idea is not just about doing many things, but making sure that we understand. So these are the requirements per unit. Right. Then we'll look at the total requirements. We then compare them to we then compare them to the available to see if there is a problem there. Right. So to get the total requirements, would multiply the requirements per unit times the number of units. But let's not forget that our number of units will be adding 1,000 on each group. All right. So we're going to say Twito $3,000 times 6, which is got 18,000 square meters. Sweeto would say 7,000 times 1, of which you get what? 7,000. Bito would say 5,000 times 1 times 2, sorry, would get 10,000. So at the end of the day, the square meters that are required is 35,000 square meters. And the ones that were told are available is only 20. If you can see here, that we only have 20. So this is a limiting resource. Available shortfall this is the shortfall. $15,000 is the shortfall. So that means at the end of the day, we can conclude that direct materials are a limited resource. Then we can go to direct labor. Any questions there before I move on to direct labor? We are told that direct labor hours are also limited, so we have to check, because we can also have what we call multiple limited resources. But if we've got multiple, we won't use the contribution per limiting factor to allocate. We then have to turn to linear programming or simultaneous equations. But but in this module, they don't normally ask you to deal with that. Right. So our direct labor. So normally, if I'm in exam scenario, I would definitely know that my direct labor is okay. Right. My direct labor. Let's find the hours required per unit. We know that is 12 per hour, and if Twitter requires 72 rand of labor, to get the number of hours, we can simply say 72 divided by 12. Right. So we can say direct labor hours per unit Twitter would say 72
divided by 12.
divided by 12, which is equal to 6 hours. Twitter would say 24 divided by 12, which is equal to 2 hours. Vito would say 27 divided by 12. What do we get?
2.25.
2.25 hours. Thank you so much. Right. Then we find the total labor hours required. We then just multiply by the number of units. Right. Twitter would say 6 multiplied by 3,000. 18,000. Twitter would say 2 multiplied by 7,000. Vito would say 2.25. What do we get?
12,500.
12,500. Right. Then available. We're told we need 44,500. So I want you to see that although they said direct labor hours are limited to 50,000, but they are not limited resource. Why? Because we've got an excess. We only need 44.
Hi, Eugene.
Yes.
Bito, when I'm calculating for Bito, I'm getting 11,250, not 12.
11,000.
250.
Yes, that's correct. 11,250.
So can we confirm that it's 11,250?
Yes.
Okay. So I will change this to 11,250. Can you correct this?
Yeah, it's 43,250.
Yes, that one is okay. It's done by Excel. I mean the excess.
It's 6,750.
6,000.
750.
Right. So just a second. Right, I'm almost done. Just a second. right? Then, so that means direct labor hours are not limited. So we don't even have to worry about them. So that means we'll no longer talk about labor hours. They are not an issue. We have enough labor hours to cater for our production process. So we'll ignore labor hours. So our focus now will be on the direct material. We have to find a way of cutting our production so that we use these 20,000 available square meters in the best possible manner. But we are told that the new customer's order must be supplied in full. So we cannot touch anything on the new customer's order. So what do you do? Out of those 20,000 square meters, first of all, let's allocate to the 1,000. Then whatever remains, we'll then allocate to the remaining units. Right. So we can say total square meters which are required to fulfill the new customer's order. Remember, it's 1,000 of each product. And we know that each unit, we have calculated that Twito requires 6, Sweeto 1, and Bito 2. So we'd say Twito 1,000 times 6, 6,000. Sweeto 1,000 times 1, which is equal to what? 1,000. Bito 1,000 times 2, which is equal to 2,000. So this order of this new customer requires
Sorry.
Yes.
Isn't it 1,000 times 2.25?
Was it 2.25? We are talking about labor, my sister. Labor is not an issue. We're talking about square meters. Remember that we concluded that labor is not an issue. We're talking about these ones here.
Okay, sorry.
Okay, it's okay, not a problem. Actually, that's good to show that you are following. Then you could check the things. Right. So the square meters to be allocated would be equal to, remember that we only have 20,000 minus 9,000. So we only have 11,000 square meters that we have to allocate to the other products. Because 9 are specifically allocated to the special order because we can't avoid it. Right. So now to find how we allocate those 11,000 square meters, we have to allocate them according to the contribution per square meter that is being provided by each product. For us to get the highest profit, we have to allocate the square meters based on the contribution per square meter. That means how much contribution are we gaining for using each square meter of raw material for each product. So we'll then calculate here. We have Twito, Bito. Right. So we first have to calculate the contribution. Remember, contribution is selling price minus variable cost. So it will be this selling price minus this variable cost 1, 2, and 3. We don't subtract the fixed cost when we're calculating the contribution. Right. First of all, we have to calculate the contribution. So that is selling price. $260, $80, 110 less variable cost. We have direct materials. I'm just taking from that table. 120, 20, 40. We have direct labor. 72, 24, 27. Variable overheads. 18, 6, 9. Right. Then we get our contribution. That's our contribution per unit. Then we have to know which scarce resource, which one is our scarce resource. Our scarce resource is the square meters of material. So square meters required per unit. We have to take that into account because a product can give a higher contribution, but it might be using a lot of materials. So at the end of the day, it might not be as profitable as what we think. Right, the square meters required per unit, we calculated them here. We know that it's 6, 1, and 2. So that will be 6, 1, 2. Right. Then the contribution per square meter. So if it was the direct labor hours that were in short supply, we're going to find the contribution per labor hour. But considering that is the square meters of material that are in short supply, we find the contribution per square meter. So say 50 divided by 6. Then the other one will say 30 divided by 1. Then the other one would say 34 divided by 2. It's this. Right. Then our ranking from highest to lowest. That's number 1, number 2, number 3. So when we allocate, we should first allocate to Sweeto because it's the most profitable in terms of square meters. Then number 2, Bito. Number 3, Twito. So as you can see, although Sweeto was giving the lowest contribution per unit, but otherwise in terms of raw materials, it's the most productive because it's only using 1 square meter to give us that 30 rand. Right. So then we'll have our allocation of the 11,000. Remember, we said we're going to allocate of 11,000 square meters. Right. Available 11,000. So we'll first allocate to Sweeto. Sweeto requires 1 per unit. And the units of Sweeto, right? Remember that we're no longer considering those 1,000 because we've already allocated the square meters for the 1,000. So Sweeto requires 6,000 units. So we'd allocate to Sweeto . 1 times 6,000. It requires 1 per unit. That means 6,000 square meters will be allocated to Sweeto. Then next, Bito. Bito requires 2 per unit, and Bito, it's how many units? 4,000. If you say 2 by 4,000, you get 8,000. They will no longer be enough. So we'll just give whatever is remaining to Bito. So we're going to allocate 5,000, and nothing will go to Twitter because we only have 11,000. So Bito required 8,000 more, but we don't have the 8,000. So we just had to give it the 5,000 that is remaining. Right. So our optimum production plan right. Sweeto, considering that okay, so we'll start with the Sweeto. Sweeto will only produce 1,000 units for the special order because it didn't have any other resources allocated. Right. Sweeto, considering that it got all the square meters that it required, we are going to produce all the units of Sweeto that are required, which is the 6,000 plus the 1,000. Then Bito, we've got that 1,000, but on top of that 1,000, we've also allocated 5,000 square meters. And each unit of Bito requires 2 square meters. So to find the number of units, we can say 5,000 divided by 2. But let's not forget to add the other 1,000 on the special order. What do we get? What are you getting?
3,500.
So this is our optimum production line plan. That will be our optimum production plan. Any questions?
Oh, I'm fine, thanks.
No questions. Okay. Right. So my friends, I think you know that they also ask you multiple choice questions. So find time to just go through these multiple choice questions so that you can see if you understand. If you've got any part that you don't understand, you can contact me. But I think during the weekend, because of the revision classes for those writing next week, I will only be available late at night. And usually you'd find that I'm responding late to WhatsApp because of a lot of work that I'm doing. So at the end of the day, you will have to contact me late, and if I'm not replying, please call. Feel free to call, right? Because I know that you are writing, so I will be giving you a priority. So if you see me not answering WhatsApp, even if you see me online, it will not be me online, it's my laptop. So you just call if I'm not responding early because you are a priority because we are writing your final, right? So for now, let's move off from this one. Let's go to the other one that I sent today. The October, November 2022. Right, so please guys, find time to deal with the question 1, which will deal with multiple choice. I'll start from question 2. Right, independent part A. We are Private Limited is a company that locally manufactures sneakers. One of the materials that is used in the manufacturing of the sneakers is leather that is sourced locally. The company is a December year end. The company uses the perpetual inventory system and values its inventory using the first in, first out method. Right, when they are using the perpetual, that means immediately there is an inventory movement, they will adjust their stock records on that very day. The other one is the periodic inventory system, whereby they don't update the inventory records on the day of the transaction. The updating of the inventory records is only done at the end of the period. Right. Then when it comes to first in, first out, we have either first in, first out or weighted average method. With first in, first out, we say that the first items to come in will be the first to be sold. The first items to come in will be the first to be sold. At the end of the day, our closing inventory will be made up of the latest products acquired. That is the last units to be acquired. Then when we come to weighted average method, they find a weighted cost for the products that are in inventory. We don't just assume that the first ones are to be sold. When we've got units that are in stock, we find their average price when we're costing them. So we'll then recognize them at exactly the same price. So we recognize our products at exactly the same price, which is weighted. So that's the difference between first in, first out and weighted average cost. I think we did those methods earlier during the semester. Right. Now, the following transactions relate to leather transactions that occurred in the month of September. On 1 September, we had 4,000 meters of leather in store, which were acquired at a discount of 5% on the cost per meter of 500. Right, so that means that was the opening inventory. The inventory that is there at the beginning of the period, we call it the opening inventory. That's the opening inventory. Right. Now our question is independent part A. Calculate the value of the leather inventory of Fuya on 28 September using FIFO value method. Right. So we want to calculate the value of this inventory here using FIFO. Right. Let me just, if it's perpetual now, there are a lot of calculations. Right. I will need my table here. Right. I'm going to have are they purchasing or producing? Purchasing. Purchased. Issues to production. Balance. Right. Units, price, total. Units, price, total. Please note that whatever I'm doing is usually important if you are using the perpetual inventory system. So otherwise, if we're using the periodic inventory system, this was not going to be necessary. I'll just tell you how we're going to do it if we're applying the periodic inventory system. I will show you how we would have done it if we're applying the periodic inventory system. Right. 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 Let's start with our opening balance. Right. We are told that if you can check here, this paragraph, the following relate to the leather transactions that occurred in the month September. On 1 September, that is the beginning of the month, we are at the 4,000 meters of leather in store, which were acquired at a discount of 5% on the square meter, on the cost per meter of 500. So we can say September 1, opening balance. Right. Let me just open this paper on my other gadget. Right. Okay, they are measuring in meters. Right. The meters that we have on that, they are saying it's 4,000. Right. The price of opening inventory, let me do calculations here. Price of opening inventory.
Shouldn't the 4,000 meters be at the balance column?
I can't hear you.
The 4,000 meters, shouldn't
Yeah.
it be in the balance column?
Oh, sorry about that. Let me just. Thank you so much. Right, the opening, we are told that there was a discount of 5% on the price of 500. So we can say it was 500 times 95%. What do you get?
$475,000.
475. So we're going to say this way at 475. In our total, we just multiply. All right, so that is our entry on the 1st of September. All right, then we have to record the transactions in their order. On the 4th of September, they then purchased 3,000 meters at 520. Right, September 4 purchase. So we record under the purchases. Right, they purchased 3,000 meters at 520. That means our total is 3,000 times 520. Right. For you to monitor your inventory, your balance, you should put them in the order in which they came first in. So we'll start with our opening balance, which was 4,000 at 475, which is 1,190,000. Remember that these ones are still in inventory. So when we buy these goods, we now have these ones plus these ones, and these ones 3,000 at 520, which is the 1,560,000. That will be our balance now. Right. Then on 17, on 10, sorry, we issued 5,500 meters to production. September 10 issue. Remember, it's first in, first out. We issued 5,500. So we would start with these ones. The first will be in. So our issues, they will go under issues. So we'll start with those 4,000. Right. Then to make them 5,500, the other 1,500 will come from here. So 1,500, because remember they are 5,500, would be at 520. I got the 1,500 by saying my 5,500 required minus the 4,000 that is from this page. So that means from this batch, we issued 1,500. If we issued 1,500 from this batch, these ones are gone. They are no longer on the balance. So on these ones, we will now remain with 3,000 minus 1,500. We remain with 1,500 at 520.
There's an error on the 4th of September. The balance, the total must be 19001190.
Okay, that is 1900000, like this.
Yes.
Okay, so it should also come here. Right. So our balance will be the 1,500 times 520, right? Which is equal to this multiplied by this one. Right. Then we'll go to the next date. On 17, 500 meters were retained from production from the issue of 10 September. So from this issue, they retained 500. And remember, it's first in, first out. So if they retained 500, obviously they first used these ones. These ones were used. So the 500 will be from this batch. The return will be from the last batch because they have used the materials on a first in, first out basis. So that means they will have returned, we'll put it under the issue as a minus 500 at 520. Then our balance in stores will now be the 1,500 plus the 500. Remember, when production returns to stores, the goods in the stores will increase. So the goods will now be 2,000 at 520. When you should remember that when production returns to stores, our balance will increase. But when we return to our supplier, our balance will decrease. So you should be very careful with those returns. We can return to our supplier because maybe we're not happy with the goods. That one will reduce our balance. But if production, when we issued them the materials and maybe they were excess to requirements and they return them back to stores, there will be an increase on the balance. Right. Then they purchased the 2,000 at 600 on 28. $2,000 at 600. The total will be right. Then our balance would be the 2,000. These ones are still there. So we'll have the 2,000 at 520, which is the 1,040,000. Then we'll also have these ones. Right, that is our last day. Then we find our balance. So our closing inventory is 2,240,000. Any questions? All right, if they'd said periodic, you were not supposed to do that table. You were just going to take the 4,000, you add the purchases, the 3,000 and the 2,000, subtract your issue, then add the goods returned. You're going to get 4,000. After getting that 4,000, you just go to the last purchase. You take 2,000 from here at 600, then the other 2,000 you take from this purchase at 520. Then that's it. Your answers are likely to be the same. There will be no need to do that big table. I think you can refer to our previous classes. You will see how we did that one. Right. Let's go to the next part. That's in part A. Explain any concern you may have about acceptance of the proposal made by Pillay to supply exotic animal skin to Vuya, and describe any effects this could have on Vuya and on Miss Van Wyk if they accept. Give one concern and two implications. Right. One of the conservation officers at the Kruger National Park, Mr. Pillay, approached Miss Van Wyk, the management accountant of Vuya. He has proposed to supply exotic animal skin of pythons and crocodiles at fair price, because there are many of these dangerous animals in the national park. The animal skin can be used in the manufacturing of shoes. Ms. Van Wyk is of the view that Vuya can use the exotic animal skin to produce any additional range of sneakers, which will be sold at a higher price and will boost the company's revenue. Ms. Van Wyk is excited about the proposal. Right. The concern here is they are trying to steal. Actually, is this conservation officer allowed to sell this to the company? So that is an illegal act, actually, and the repercussions can be dire if they are caught. And actually, as a responsible corporate citizen, a company should follow the laws and regulations. Right. Right. Acquiring the skin from the conservation officer will be a breach of laws and regulations. And may endanger protected species. So that can be a concern. You can put it in whatever manner that you feel is right. Right. Then the implications. Right. You should note that they said that we should explain the implications both on Vuya right. Then our implications. We are saying the company can be fined or get other severe punishments. Miss could be imprisoned. And can be fired. So those can be the implications. You can put them in whatever manner that you deem fit. Any questions? Right. So let's go to the next one. Let's go to part B. Going Green Limited. Going Green is a South African company that produces solar panels. Going Green was established 10 years ago by Ms. Kanya, who is very passionate about reduction of environmental emissions and youth unemployment. Going Green produces two different types of solar panels, namely monocrystalline and polycrystalline. The company is a September year end. Let's go to the required. Calculate the budgeted break-even point in units for the polycrystalline for the 2022 financial year. Right, we should remember that break-even is they only talked about the polycrystalline. Break-even, let us start by talking about what is break-even. Break-even is the number of units that have to be sold. The number of units or the value, here they said in units. The break-even is the number of units that have to be sold so that the company does not make a profit or a loss. That means revenue is equal to the cost. Right, to calculate our break-even, would say total fixed costs over contribution per unit. So for you to be able to calculate, you need your total fixed costs and then you find your contribution per unit. So now let's go and find out what are the total fixed costs for this polycrystalline and what is the contribution. Right. This is the budgeted information. I think the contribution, we can get it from these. We are given the sales and the variable costs. Then we are told the additional information. Manufacturing overheads of 418 specifically relate to polycrystalline. So these are specific. Administration and maintenance are estimated at 500,000, of which 80% is considered fixed. The variable portion is already included in the variable overheads per unit above. 40% of the fixed cost specifically relates to monocrystalline and the remainder to polycrystalline. Right. I think that's the end. The other part, I think it talks about solar and stuff like that. Yeah, I think it has nothing to do with what we want here. Right, so what we can do, first of all, let's calculate the fixed cost. So from that formula, I knew that I should find the total fixed cost and I should also find the contribution per unit. Right. So here I know that from here I'm told that the fixed manufacturing overheads are for 18,000 for polycrystalline. So I would have fixed manufacturing overheads which is for 18,000. Right. Then I know that there's also the administration and maintenance. There are 500, of which 80 are fixed. So multiply by 80%. But out of that, those 80%, 40 are for monocrystalline. If 40 are for mono, that means for poly, the product that we want is the remainder, which is 60. All right. So we're going to say administration and maintenance. Would say 500,000 multiplied by, first of all, multiply by the 80%, which is fixed. After multiplying by 80, we then multiply by the 60%, which is for polycrystalline. What do we get? What do we get?
240,000.
It's what?
240,000.
Right. So that means our total fixed costs are 658. Then we do a calculation of the contribution per unit. Remember, our contribution per unit is selling price minus variable cost per unit. Right. So we'll have our selling price right. You should remember that the selling price were given here. Variable costs, direct materials were given here, direct labor, variable overheads, then the commission. But commission, we should be very careful, it's given as a percentage of sales price. So we'll find 8% of the 4,000. Oh, sorry, of the 2,000. Right. So we're going to say our selling price 2,000 less variable costs direct materials 450 direct labor 400 variable overheads 300 sales commission 8% times 2,000. What do we get?
160.
Then we add we then get our contribution per unit. Right. Then we can be able to get the break-even units. we now say our fixed cost 658,000 divided by 690. What do we get?
953,62.
954 units.
Mm.
And you should know that for break even, we always round up. We always round up.
Upwards.
So even if it was 953.2, we're going to make it 954. So that means for them, so that they will not make a profit or a loss, they should sell 954 units. Any questions? Right, number D, calculate the margin of safety ratio for monocrystalline for the 2025 financially, assuming that the break-even units for this product are 375. Right, margin of safety, that is by how much the units can, by up to what level can the sales reduce before the business starts making a loss. To calculate that, we say sales minus break-even sales multiplied by 100 over the sales. Right. Now we're told that the break-even is 375. Remember, we're dealing with monocrystalline. So it's 375, and the sales of monocrystalline is 3600. So we'd say 3600 minus 375 multiplied by 100 over 3600. What do we get?
$89.58. So it'll be
89?
90 units. It's 89.58.
Right.
Oh,
So it's
imagine.
18.58.
80. Sorry, it's not even money. 80.
89.
58.
Sorry about that. It's a percent. That means their sales can drop by 89.58% before they make a loss. Right. Then prepare a once-off order price that going green should submit to 1P restaurant using relevant costing principles and provide reasons for the inclusion or exclusion of each item. Right. Remember the principles that we only include. We did that, I think, in our last class, whereby we say we only include incremental costs. We don't include sunk costs, whereby we're saying if it's a raw material and if it's usable, we use the replacement cost and stuff like that. Right. Let's go and check that order. Going green has seen a surge of solar panel orders from companies who have adopted solar energy as a backup to mitigate losses from constant power cuts experienced in the country. Below is information related to once-off order to supply 50 polycrystalline solar panels to 1P restaurant in the 2023 financial year. The management accountant has prepared the following costing estimates for the order. Direct materials, aluminum panels, 28,000. So if there is no story, I think we'll just take them as they are because they didn't say anything here. So we'll say direct materials, aluminum panels. Right. 28,000. Then direct materials, solar cells, 9,000. We have to go to N1. Solar cells were already in stock. They are already in stock and were originally purchased at 9,000. The materials are regularly used by going concern and can currently be replaced at a cost of 15,000. Right. Remember what we said. So we'd say solar cells, original price is a sunk cost. We have already incurred it. We don't include it. Then solar cells, use a replacement cost as they are in regular use. Remember from our previous class, because when they are in regular use, it means after using them, we need to replace them. That means they are continuously used. So we use the replacement cost, which is 15,000. Right. Then labor, excluding overtime, 100,000. Let's go and check N2. 5 full-time manufacturing staff who earn a monthly fixed salary will work on the order. They are expected to work overtime of 70 hours in total, paid at an overtime premium of 300 per hour. These are full-time manufacturing staff. Salary, direct labor, committed costs. This is a fixed salary. Whether they don't work on the special order or not, we'll still pay them this monthly fixed salary. So it doesn't change because of this special order. So it will be we call it a committed cost, which will not be included in the relevant cost. But this overtime here, it's specifically due to the order. It's an incremental cost. So we have to include it. So we'll have our overtime. $70 multiplied by 300. What do we get?
21,000.
Then we've got fixed variable overheads. They didn't say anything, so we'll just include them. Variable overheads, 19,000. So variable costs, if nothing is said, you just include them. But fixed costs, normally we don't include them unless we're told that they are specific to the order. Right, fixed cost 38,000. We have to read N3. The overheads include a depreciation amount of 20,000 for the administrative building that has been acquired by the company a few years ago. The rest of the amounts relates to overheads that are expected to increase because of the once-off order. Right, so the one for the admin building, we're not going to include it. The depreciation, not related to order. So it's not coming as a result of order. Then fixed overheads, the specific or incremental, we include them, which is the 38,000 minus the ones for the depreciation, which is 20,000. That's 18,000. So fixed costs, we only include those that are arising specifically because of the order, not the ones that are already there. Then we're told that the management accountant has indicated that to get to the desired once-off price, a markup of 15% will be added to the cost. So they'll add a markup of 15%. So we'll add the cost here. Then we'll have our markup, 15% times 1,000. What do we get?
15,150.
15,150. So the price that they are going to charge would be equal to right. Any questions there? Right. So that's our solution there. Right. We now have to move to question 3. Before we move to question 3, I will give you a break. It's around 10 now. We'll start by 10 past 10. I'll give you about 10, 11 minutes break. By 10 past 10, we'll be starting. I'm not going to stop, so you don't have to use a new link. I will not stop the class. Actually, we'll still be in class. Maybe you can just mute yourself so that we don't hear what is happening there. So we'll continue by 10 past 10. Thank you so much. Welcome back. Now we can continue. Question 3. The following statement summarizes some of the standard costing variances of GMW's products for January 2022. Okay, so that's question 3. We are given the following statement summarizes some of the standard costing variances. Right, remember that in standard costing, they compare the actual to the standard performance. Then adjustments will be made accordingly. So we compare our standards to our actuals, and then there will be adjustments that will be made to check what were the differences that happened, and maybe get the reasons behind any differences that happened. Right. Right. So now let's go and see what is the required there. Right. Calculate the following actual selling price per kilogram of materials. Right. Actual selling price per unit, sorry. Right. We have to find out. Normally, we know that when we are doing standard costing variances, when they say calculate the actual selling price, maybe that means they've already given us. We have to find a variance that is given that involves the selling price. Normally, we know that if there is the sales quantity variance or the sales price variance, any of the two can help us to determine the actual selling price. Right. We are given here the selling price variance. So if we know the selling price variance, we can be able to determine our selling price, the one that they are looking for, the selling price per unit. Right. We know that selling price variance would be equal to actual selling price, which we are looking for, then minus budgeted or standard selling price. Multiplied by actual quantity sold. Right. The selling price variance we are given is 3/4 and it's unfavorable. That means it's negative 3/4. Right. We can be able to determine the budgeted selling price, because according to the budgeted to sell to 25,000 units and the revenue was 10,000. So we can be able to get the budgeted selling price. So if I can calculate here my budgeted selling price, we can say 10 million divided by 25. What do we get?
400,000.
400,000. So then we find our actual units sold. During the month, actual units sold was 24. So we know it's 24. So we can say right. We can say negative. That's 340,000 would be equal to the budgeted selling price. Actual selling price is what? It's what we're looking for. We can call it X. Then minus the budgeted selling price, which is 400,000, times the actual units, which is the actual units were told on additional information that it's 24.
Excuse me, sir, why are we minusing the 340,000?
The what? It's negative. It's unfavorable.
Oh, okay, no, thank you. Thank you.
I think we have to put it the other way around so that Excel can be able to take it. Let's start with the other side. We can say X minus 400,000. I started with the other side of the equal sign. Multiplied by 24 would be equal to negative 340,000. Right. We can solve this. We can say 24x minus, can you say 400,000 times 24? What do we get?
9,600,000.
9,600,000 will be equal to negative 340,000. So we can say 24. Right, so say 24x. If we take the 9,600,000 to that side, it becomes plus 9,600,000. So we get 24x is equal to, what do we get? Negative 340 plus 9,600,000.
So 926 zeros.
That means our x will be equal to 926 divided by 24.
Three, 858.
It's what? 38.
5833.
Right. Is that fine? So that would be our actual selling price. Any questions? Right, we go to the next
So,
one.
sir, are we rounding off on the selling price, or do we need to have the comma digits as well?
The what?
On the actual selling price, do we need to round off?
Yeah, we can just round off, yes.
Okay, thank you.
If they don't give you any rounding differences, you can round off. Maybe you can even round off sometimes even to 2 decimal places. Right. Then the next thing, actual price per kilogram of materials. Actual price per kilogram of materials, you know that maybe you can check the a direct material price variance. If you can check here, our direct material price variance is 125,000 favorable. Right. We know that direct material price variance will be equal to standard price of the materials minus actual price multiplied by the actual quantity purchased. Right. So here our direct material price variance were given is 125,000 favorable. Then direct material purchased. Okay, we need the price. We can get the direct material purchased is 80,000 kgs and the cost was 350. So we can find the standard price. Standard price of materials we can say 350,000 the total cost divided by the number of kgs 80. What do we get?
$4.38.
4.38 per kg. Right. Then the actual quantity purchased. The direct material purchased and used were 90,000. So it's 90,000. So we can say our variance which were given and it's favorable, which is 125,000, is equal to the standard price, which we have 4.38, minus the actual price, which we're looking for, which is X, multiplied by the actual quantity purchased, which is 90,000. Right. So then we can have 125,000 is equal to, can you say 4.38 times 90,000?
It's 394,200.
Minus
ask something. Do we get marks for solving for X? Because the Casio calculators can already solve for X just on one step.
Yes, I know that. But you can just do that. But I need to show others who don't have that.
Okay. But do we get marks for solving for X?
Normally, if you just put your equation, then I think
okay.
then that will be fine.
Thank you.
Right. Then would you have 90,000 X would be equal to 394,200 minus 125,000. So then 90,000 X would be equal to what?
269,200.
Then our X would be equal to 269,200 divided by 90,000. Which is equal to what?
2,99.
So that's how we find the selling price. Right. Any questions there? Right, next one. So you can see that instead of asking you variances, like the other question that we did, we're calculating variances, they can ask you in this way. Actual direct material costs. Actual direct material costs. Would be equal to the actual quantity purchased multiplied by the actual price. So we know that is 90,000 kgs that were purchased, and the actual price we found it up there is 2.99. The actual price is 2.99 up there. So what do we get there?
$269,100.
So that's 269,100. Any questions? Then we have got the actual direct labor hours. If we've got actual direct labor hours, then we have to look for scenarios where we have got the direct labor hours, maybe like the direct labor efficiency variance. Right, we are given here the direct labor efficiency variance is 15,000 unfavorable. Right. Direct labor efficiency variance which is equal to standard hours minus actual hours. Multiply by standard rates. Right. The efficiency variance were given here as 15,000 unfavorable. Right. Right. Let's not forget that we intend to find the actual direct labor hours. Right. The standard hours, we know that they produce the 24 units. And the direct labor hours, let's find the standard hours first. Let's find our standard hours first. Right. Standard hours. Right, first let's find our standard hours per unit. Remember that the standards are the ones that are used to create the budget. So if you want to get the standard parameters, you can get them from your budget. If you want to get the standard parameters, you can get them from the budget. It can give you what are the standards there. So if we go to the budget, we can be able to find how much are the standard units per unit. Right. Right. We know that for 25 units, they need 1,000 labor hours. So we can say 1,200 divided by 25. What do we get?
50. Oh, sorry,
What do we get?
48.
48.
Yeah, 48.
Right. So then our standard hours, it would be 48 times what? 24 units. Remember, they actually produced 24 units. What do we get?
1,152.
1,100
52.
Right. So these were the standard hours that they were supposed to spend. But they spent what was the standard rate? Our rate per hour. All right, the cost was 55,800 and the hours were 1,200. We can be able to get the standard rates there. Standard rates, which will be equal to 55,800 divided by 1,200. What do we get?
46.5.
40?
46.5.
per hour. So we can come here and say our direct labor efficiency variance, which were given at 15,000. Okay, it's negative, so I'll put it the other side. Right, our standard hours are 1,152 minus the actual hours, The actual hours, I didn't check them. Let me just check if we are given the actual hours. Oh, we're actually looking for the actual hours. So that's our X. So minus X multiplied by the standard rate, which we calculated 4650, is equal to our variance, which is a negative 15,000. Right. Then we can say 4650 times 1152, what do we get?
$53,568.
53,000.
568.
Right. Minus 46.50x is equal to negative 15,000. Right. Then we can say 53568 plus 15,000 is equal to 46.50x. Right. 53 minus 15, what do we get? Do we get 38? Am I correct there? Which means our X would be equal to
'I think it's plus 15,000.
So it's 68,568, not 38,568.
oh, it's plus. Sorry
It's
about that.
plus.
It's minus. So what would be our correct answer then?
$1,474.6.
1,000.
474.58.
Right. Any questions? All right, let's go to the next one. actual variable manufacturing cost. We check if we got anything on variable manufacturing overhead expenditure variance. Variable manufacturing overhead expenditure variance. Is equal to budgeted expenditure minus actual expenditure. Right. Our budgeted is 12500 and our variance is 20,000 unfavorable. So we can say 12500 minus x is equal to negative 20,000. That means our x would be equal to 12500 plus 20,000. Would you give us our x is equal to 14500? That would be our answer there. So please, at your own time, can you also know how to calculate these things, like assuming that you are not given them? I've given you the formula, so it will be very easy for you to calculate. But sometimes they don't. Here they gave you the variances, but sometimes they can ask you to calculate the variances. I think we saw in our last class. Actual fixed manufacturing overhead cost. We do the same again. Fixed manufacturing, we're given the fixed manufacturing overhead variance. Fixed manufacturing overhead expenditure variance is the same as above. Budgeted expenditure, that is relating to the fixed, minus actual expenditure. So our variance is 23,000 favorable is equal to the budgeted. Our variance, we have it here. This is the fixed manufacturing overhead variance. Then we know that the budgeted is 150. Right, we get our x is equal to 150,000 minus 23,000. We get our x 127,000. Any questions? Right. Explain the possible causes of the direct material usage variance in direct materials labor rate variance. Right. Possible causes. Direct material usage. Right. Our usage variance, are we given? Because normally you should argue in terms of the one that is given. Or they just give us reasons. We don't have a particular, but we're just stating in general. Right, there's one reason that you should know that it works for all variances. All variances, this reason you can use it. Setting off unrealistic budgets. So please, this one, when we don't have a reason, you can always use this. Because as long as our budgets are unrealistic, there's bound to be a difference. Right. Then the other reasons, sabotage by employees. Machinery problems. E.g., use of old machines, they can lead to wastage. Power outages during production. When an employee is busy, then power goes. He might result in, there might be result of wastage in materials. Right. This one is an adverse that I'm explaining here. Right. It can be also use of lower grade of materials. Use of inexperienced and unqualified employees. It can lead to a wastage of material. Right. Let me just set it out as this. This is unfavorable. On the other hand, it can be favorable. Setting of unrealistic budgets can also work. Right. A use of higher grade of material. Experienced employees, when they get experience, they waste less. Improved machinery. Improved production processes. All these can be reasons for a material usage variance. Right. They also asked about the direct labor rate variance. Right. Unfavorable, we can use of higher grade of labor. You end up paying more. Wage negotiations after preparing budget. Inflation beyond expectations, which can cause salaries to be hiked. Favorable, use of lower grade of labor. Increases agreed, which are less than expected. We're expecting to sit with the union and agree on 10%, but we successfully negotiated for 8%. Unrealistic budgets. You can also put unrealistic budgets here. Increase in minimum wages. So those can be some of the reasons. Right. Explain the difference between budgeting and standard costing. Budgeting uses standards to create a budget based on the budgeted quantities. Standards costing many record costs based on normal production based on normal production capacity. And represents optimal costs under expected operating conditions. So a budget will change depending on the number of units that you want to produce. So we're suiting the standards to the budgeted production, whilst the standards are set based on normal productive capacity of the entity. But we should know that they are related because budgets are created from standards. Right. Ladies and gentlemen, because of time, I think you can finish off the other things. I think the quantity statement, we've done it. Then the last question was on, which I've left again, was on what? Variable costing, and I think it's a very important topic, variable costing and direct costing. I think we did a lot of questions on that. We've done a lot of questions. You can even refer to our recordings to see how you can be able to do that. Then if you've got any questions, as I said, you can call late or Monday morning, either late today, because I think today I'll be very busy the whole day. You might not get hold of me. And tomorrow I might be also be very busy during the whole day. I'll only be available late at night. Don't worry, you can call anytime. Even early in the morning, you can call before I start classes. Then on Monday, I'll be available, I think, all morning. I'll be available. You can still ask also during the morning for your assessment. So please just use our recordings to see the areas that we've covered so that you can be able to see what you can do. Thank you so much, and I wish you all the best. Any questions? Okay, if you don't have any questions, okay, thank you so much. Wishing you all the best.
Thank you, sir.
Thank you.